Okay, so let's take a look at this today because that is amazing news for anyone looking to get into the mortgage market today, the real estate market, and all around. I am really excited actually to see that house prices did go up 8%. And I'll talk a little bit about why I think that's happening and also what's happening in the mortgage market. And most excitingly, my visit to the Bank of Canada Museum, which happened just last week on March break when I went there to see all about currency, inflation, and all the wonderful exhibits that they have at the Bank of Canada Museum. So I have some pictures to show you all, and what I'll do is I'll load them up here in a second and share them with you. In the meantime, if you have any questions on my podcast today for Canadian Mortgage Weekly, Canada's only video mortgage news weekly podcast, let me know in the comment section below, or you can send me a direct message. I'd be happy to take a look at your questions and answer you that way. I've been in the business now for this is my 13th year as a mortgage broker, and looking forward to working with you if you have anything related to mortgages and going that direction. So with that, I'm going to share my presentation. I have some really good pictures to show you all. We're going to take a look at them right now. So first things first, this is my trip to the Bank of Canada Museum, and it was in Ottawa, Ontario. Just to let you all know, the Bank of Canada Museum is located right beside the Bank of Canada in Ottawa, and that is across from the Parliament building. So if you've ever been to Ottawa, you'll know where the Parliament buildings are. They're just downtown near the river, and you'll find the Bank of Canada across the street, and there is the Bank of Canada Museum right there. So here's me standing outside at the Bank of Canada Museum. At this point, I'd never been there before, so I'm very excited to go in and check it out. So this is me across the street. As you can see here, I'm standing across the street there. The street to my right is blocked off there, and that street goes to the Parliament buildings, and they've blocked that off now where traffic cannot go there anymore. And then to my left and straight, if you were to walk that way, the Parliament buildings are right there. All right, so what's this? You're looking at this here is a payment and liquidity simulator for the financial system in Canada. I am really excited to be nerding out on this because you can see here there is a hold up in the small Canadian bank here. You can see it's red there and everything else is blue and running smoothly. Essentially, this simulator has a bunch of toggles and controls like kids can play with or adults, but I felt like a kid here because it was pretty amazing. You can toggle it like a plumbing line and see the money theoretically flow through the financial system as it does. And there was a liquidity crisis here in the small Canadian bank. And this was kind of neat because you can kind of mimic what was happening with the recent failure of Silicon Valley Bank in California, where there was a run on the bank and there was a liquidity crisis causing that bank to fail. Don't think that will happen in Canada, but you never know. Canadian banks have actually never failed in the last 100 years. So compared to the United States, we've actually banks failed since 2008. So that is an interesting stat, just to throw that out there. Here is a simulator my son was playing on. It's a inflation target space invader type game. So you're flying through the space and you're supposed to hit the 2% targets. And with those targets, you can see you get a score. And on the left screen, it shows you the amount of variance you have. And on the right screen, which you can't see, it has some additional information with scores. But in the middle, you're actually controlling your ship. It's almost like the Bank of Canada controlling the Canadian economy and trying to hit that 2% target. I was really impressed here because as we left the Bank of Canada Museum, I asked my son, so what is inflation supposed to be at? He's like, Dad, it's supposed to be at 2%. Still remembers that to this day because he was supposed to hit that 2% mark. He loved this game. Really recommend it. He played it a bunch of times. So there was a bunch of kids playing this game as well. Here's another view of that game. The information instruction screen, you can see here, just like the Bank of Canada aims to keep inflation low and stable and predictable at a 2% rate. So they want you to control that rocket ship so you can hit that 2% target. Okay, so what is this here? This is actually an inflation simulator. This was really neat because you can actually roll the wheels either way as to where prices come from and demand and supply and the overall effect on pricing that way. So you can see here, the left side was a supply wheel and the right side was a demand wheel, which you can't see. But as you actually roll the supply wheel to the right, it increases supply. And as you roll it to the left, it actually decreases supply. And if you roll the demand wheel to the right, it increases demand. And if you roll the demand wheel to the left, it decreases demand. I and the kids had a lot of fun with this simulator as well. And in the middle there, it shows prices go down, prices go up. So right now, as we all know in Canada, we've had an increasing inflationary environment. Simulator would say that that is a cause because there's been too little supply and too much demand. And that kind of makes sense. We had a lot of businesses were closed over the pandemic. And a lot of people were able to save a lot of money during the pandemic. And because of that, we saw a lot of increased demand and decreased supply. All right, so definitely recommend this simulator for your kids as well. Here's a picture of the average amount of newcomers that come to Canada each year. And actually over 200,000 people each year, quite substantial. And as you can see here, that would indicate that, each year we have about, what's 227,000 these days? That's bigger than the city of Barrie. I know that. That's bigger than the city of Brantford. Maybe the city of Windsor. So we have about the city of Windsor coming into Canada every year. It's a lot of people. It's a lot of people to be bringing into Canada. So what is that going to have as an impact on the Canadian economy? Well, it's going to create additional demand for housing, obviously, because as those people are coming in, they need a place to live. So they usually start renting, pushing rent prices up higher. And as rentals become less available, those renters try to buy homes, causing home prices to go up. Well, we've seen home prices drop lately. So how does that work? Well, rent prices have been going up because people now cannot buy and cannot find a place if they were to buy a place because they can't qualify, don't have enough cash. So rental prices have been going up quite considerably. All right, so what else do I have here? I have a picture of, well, that's actually it. I have a picture of currency I made at the Bank of Canada Museum, but I don't have it here. So I'll have to try to show it to you on my next episode. But for now, here is a update on the current average monthly mortgage payment. So on a $500,000 home, you're looking at $2,679 monthly. On a refinance, max refinance on a $900,000 home, you're looking at $3,950. So that's based on current rates. If you need any more information, you can reach out to me about that. Here is the 5-year Canada bond yield. We did see it increase here between the beginning of February and the beginning of March. But since then, what's happened? The Silicon Valley Bank collapse and a further 4 banking collapses following across the world. That's pushed bond yields lower. As you can see here, I pointed it out by this big red arrow, and you can see here that could go lower even still, 2.75% from a high at around 3.65%. So that's almost a 1% drop. I've already seen banks lower rates by about 50 to 60 basis points. So that's going to be pretty interesting to see what happens with the market going forward, because that's actually going to cause Canadian home buyers to afford more home based on fixed rates falling. And with fixed rates falling and affording more home, makes those buyers be able to afford to pay a higher price. So could spark those buyers to be able now to get into the market, putting more homes off the market. And we already have a low supply out there. So it could actually bring prices back up. And I have an update on housing prices in a minute here. They did go up for the month of February. So I'll share that with you in just a sec. Inflation is down to 5.2%. You can see this trend line is steadily showing a decrease of inflation since June. It's still pretty high at 5.2%. As I mentioned, the Bank of Canada does target a 2% inflation rate. However, we're looking at a 5.2% inflation rate for Canada right now, continuing on its downward trend. On the United States side, we have an inflation rate of 6%, continuing its downward trend. Well, this is very nice to see, and hoping that we see this trend continue going forward for American inflation. CDOR rate showing that it's actually been flatlining since about the middle of December. This is a metric I use to discuss variable rates and their competitiveness in the market. Since banks usually use the CDOR rate as a metric to price their variable rates, we have not seen variable rates shift very much since December. And because of that, CDOR rate really hasn't shifted, or actually variable rates haven't really shifted because the CDOR rate hasn't shifted. Now, if the CDOR rate did go down, variable rates would start coming down. Actually, the new ones that are being provided by the banks. Prime rates, different. Prime rate regulates the discounts, the effective discount that you have on your final mortgage rate and your payment on your mortgage rate if you have a variable rate. So that's an interesting metric to see. Hasn't really flatlined in a while. We saw a steady increase. So if it continues to flatline, we may see no change in variable going forward. Jobs report came out in February with a 0.1% increase. A smaller increase than in January, but still a very small, modest increase. We'll see what happens in March. Increases have been becoming smaller and smaller. Prime rate in Canada, as you see, we had a big trend down since 1980 with the prime rate, but since 2022, we've seen prime rates spike. Hasn't spiked much, I don't know, since the 1980s, maybe the mid 1990s. You can see their prime rate spiking around this area quite considerably. I mean, we did see a spike in 2008, but not that much, not this much. This is a huge increase. Those who are loaded up with debt are going to see increased borrowing costs, and because of that, they'll see increased need to hunker down and trim the budget. Next Bank of Canada announcements. Join me for a live pre-rate show on the 12th. We'll be covering the Bank of Canada rate increase. Current overnight rate remains steady at 4.5%. And the last rate announcement, Bank of Canada held rates steady at 4.5%, with making a prime rate of 6.7%. And here we are, the average national house price. What's happening with this? Well, with the average national house price the way it's been, we've seen a drop since February 2022 to essentially January of 2023. There was a modest increase between July and September, but that was erased, and now we're back up to where we were at now. So really remaining steady in this 640, 650 range. Right now we're at $662,437. However, February usually is a high month. As you see, February was high here, and February was very high here. So with a high point in February 2021 and 2022, this may be the high point we see for 2023. And based on the average national house price, here is what we're looking at for monthly payment for a minimum down mortgage. You're looking at $3,644.22 monthly, or $1,680.20 biweekly. For a 20% down purchase, you're able to increase your amortization to 30 years, making your monthly payment with 20% down $2,904.68, or a biweekly payment of $1,339.06. That's at current market rates, and rates currently are starting to trend down. Not enough of a long-term trend down to officially make it a new trend, but they are trending down in the short term. That concludes episode 129 for Canadian Mortgage Weekly, Canada's only video mortgage weekly news podcast with your host, Joe Bladek. I've been in the business now my 13th year in the mortgage industry. I'm a mortgage broker. I deal with all the banks, lenders, credit unions that you could probably think of. I deal with AAA lending, as well as B lending, alternative lending, and private lending. Whatever your lending need may be, I can give you some advice and possibly give you some money. If you're looking for money right now, it's hard to get. Liquidity is hard to find in this market. However, after being in the industry now for my 13th year this year, I've seen a lot of downturns and upturns and side turns. It's been an interesting market. Looking forward to setting up your mortgage today. If you have any questions, please leave them in the comment below, the chat there. I'll try to get back to everybody I can. And if you have any private questions, you can send me a private message through Facebook, email, or whatever you need. You can see actually my appointment link is in the video description below, and I look forward to seeing you there. If any one of you has any comments about the Canadian banks and what you think will happen there, I'm also interested to hear about that. With the recent collapse of Silicon Valley Bank and other 4 banks around the world, I'm interested to hear what will happen from your perspective on the banking industry. All right, thanks for watching.